Nvidia's stock price is up over 60% year to date. One of the main reasons is the overall popularity of artificial intelligence. But on today's episode, what I want to do is take a closer look at 3 risks that I believe many investors are keeping an eye out for Nvidia. So let's get started. So as I am recording this episode on March 7th, we can see Nvidia stock right now is sitting at $235. The company in the past month is up roughly 0.6%. And like I mentioned, in the past year to date, the stock is up roughly 64.7%, sitting at a market cap of $581 billion. If we take a closer look, though, the company from its all-time highs is still down roughly 28.5%. I want to say this kind of pull-up is happening a lot faster than I thought it would. And that might be a little bit worrisome, but we'll take a closer look in today's episode, like I mentioned. So if you follow me on Twitter, you might have noticed that I tweeted this CNBC video that came out earlier today, and it was an interview with Nvidia CEO Jensen, and how the company has kind of transformed from this gaming company to an artificial play. I do want to say there is a lot of great information there that if you have time, definitely recommend it. But within the video, they did something even better. They kind of talked about 3 different risks affecting the company. And I want to explain those 3 risks that they mentioned and kind of share my overall thoughts. The first risk is Nvidia's China restrictions and these kind of international conflicts that are preventing Nvidia from selling chips. The China exposure for Nvidia is roughly a quarter based on the video, so it does take a big chunk, and it's definitely something to understand. Right now, we are seeing a lot of exports coming out from the United States to China. One of them we saw, I believe, in late 2022 when Nvidia couldn't sell certain artificial intelligence products or GPUs to China. So this is a big issue, and overall, the company and the CEO did mention that, hey, they are taking steps to eliminate this risk. The first one is Nvidia ended up creating or re-engineering their products. For example, they couldn't sell the A100 GPU to China and their customers there, but they created kind of a nerfed version or a weaker version, the 8800, and this kind of helped them maintain that market there. Unfortunately, I want to say that this kind of nerfing, if one is very, very dependent on China exposure, is gonna open up opportunity for Chinese competitors to kind of be able to catch up with Nvidia. Obviously, I personally understand why these kind of exports are coming in place here in the United States, and I have nothing against them, but I do want to say it is a bit of a risk for Nvidia, especially when there is this very popular company called Byron, which is a Chinese company that focuses in artificial intelligence, high-performance computing, graphics cards in their own ways, and obviously this can be a threat for Nvidia's Chinese market if Nvidia has to kind of nerf down their products. I do want to say there is something important to take a closer look at here, and why maybe this might not be too much of a risk. Just like Nvidia has export bans to kind of not be able to send certain products to China, the big manufacturers of advanced compute products like TSM are unable to create advanced nodes to Chinese companies as well. So even though there is a company like Byron that is creating artificial intelligence computing chips, they might not be able to be made at mass-produced levels because companies like TSMCs also have some form of export control where they can't create the chips from Byron. So something to keep in mind now. Kind of talking about TSM, I do want to say this is probably the second biggest risk for the company. And for those not familiar, Taiwan Semiconductor Manufacturing, this is the leader producer of advanced chips. So if you have these small chips that are being used for artificial intelligence, they're most likely being produced by TSM. Fortunately, TSM is also kind of in a lot of geopolitical risk right now, where if we take a closer look at TSMC's fabrication plants, most of them are located in Taiwan. So a big risk is that, hey, what if Taiwan gets invaded by China? This would be a lot of bad news for a company like Nvidia. Before we go any further, I want to thank you for watching, and I need your help to reach my goal of 30,000 subscribers by the end of the year. So if you can do me a favor, hit that subscribe button and thumbs up. Also, if you want some fantastic insight into the semiconductor industry, join my other channel, Semiconductor Investing and More, where I use my electrical engineering background to break down the semiconductor market. Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode. There are other competitors. The only other competitor in this market right now, in my opinion, that can be able to at least succeed for some time would be Samsung. Samsung has made Nvidia's GeForce Now graphics cards in the past, so I don't think it's impossible for them to be a potential backup plan. The other thing is Intel, right? Intel is expanding their manufacturing lead and are building plants in United States. Unfortunately, though, those plants take multiple years to build up. TSMC also is kind of reducing their international risk or their geopolitical risk by also expanding into other markets outside of Taiwan. We know, for example, from this update in December 6, 2022, that TSMC is now expected to build 2 plants at roughly $40 billion in the United States. Again, these plants aren't expected to be open until, I believe, 2024. So it takes time to build up these plants and then ramp up. But at least we are seeing that at least that risk is kind of minimizing a little bit in the long term of things. In the short term of things, though, there is that huge kind of risk that, hey, what if these geopolitical tensions increase, it can definitely bring bad news for companies like TSMC and Nvidia. At the end of the day, I do believe. At the end of the day, I personally don't believe that's gonna happen anytime soon. Of these tensions rising, but it's always something to keep in mind. And eventually, we are getting this kind of exposure into other markets. The third risk that they mentioned in the video is one that I enjoy a lot, and I do believe this is probably one of the biggest risks in my opinion, right? I do see that Chinese export controls as a risk. I do see that kind of tensions with TSMC and that kind of dependency on TSMC to be a risk. But I do believe this is probably the biggest risk of them all, where they mention how Nvidia's customers are also their competitors at the same time. So for example, prime example was Nvidia used to create the chips for the Tesla cars. Tesla becoming a big tech giant, they decided to build their own GPUs and are now using their own chips. We are seeing other kind of cloud giants like Google Cloud create tensor processing units, TPUs, which are very important for machine learning. So they're kind of reducing that dependency of Nvidia. I want to say on the bright side, I think Nvidia is run by management that is very welcoming to competition. And by welcoming, I mean that they just like that risk, or they like to know that there's someone behind them, because that forces them to continue to innovate. But I do believe maybe there might be a company that eventually might reach innovation that Nvidia might have to tackle. At the moment, I don't see that, but the potential of that happening, in my opinion, is the biggest risk of them all. I mean, we have other players like Microsoft and Amazon. They're also developing their own chips in one way. Some of them are CPUs, right? They're not all GPUs or kind of machine learning products, but we can see how big tech is entering the silicon space, and I don't think that's going to stop anytime soon. So I do believe these are the 3 risks that a lot of investors are keeping their eye out. Like I mentioned, the first 2 are ones I understand. I do believe the third one, even though it's one that I believe we barely talk about, is the one that I'm personally the most worried about. But at the same time, I believe management deals with competition pretty well. I want to talk about one more risk, and in my opinion, this is more of a short-term risk, not a long-term risk. I do believe right now we are seeing this huge popular hype of artificial intelligence and kind of machine learning and ChatGPT and generative AI. And while that could provide a great growth story for Nvidia, I do believe it's like anything in the investment world. We kind of overestimate how much it would impact in the long term in the short term of things, and we kind of underestimate how much it might impact in the long term of things. And I believe that's what's happening. I believe here for Nvidia and with the AI market, we are kind of overestimating how much revenue this company can gain in the short term of things, and it's causing stock prices to kind of jump up dramatically. Like I mentioned, year to date, the stock is up over 64%. But to me, in the long term of things, I think we might be underestimating how big this market can be. So I'm a short term bear. Nvidia is one of my number one positions. I believe it actually is my number one position, sitting at these prices at over 10. I wouldn't say closer to 15% of my portfolio. So I am a short term bear. I have no intentions of selling, but I do believe in the next 5 years, the market cap of this company can be a lot bigger. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.